Hey, good morning, everyone. Paul McMann here with Forex Smart Trade. So glad you could be with us this Tuesday morning, May 11th. Here at Forex Smart Trade, our goal is to help you become the best version of yourself by helping you become financially independent through currency trading, using our proprietary trading tools and our best in the business one-on-one training. With that, we will. Somebody's got. Please mute yourself if you haven't muted yourself. With that, we do. One of the tools we use to help you become a better trader is doing live trades, which we are doing now. So let's get started. And first thing on the agenda is to hear the disclosure.
Due to federal and state regulations, we are providing the following disclosure. Please stay tuned, as this will take less than a minute. Foreign exchange, futures, and cryptocurrency trading are highly risky, and you can lose all the money you invest should you decide to engage in live trading. We are not responsible for your investment, trading, or tax decisions. We are not licensed financial advisors, traders, accountants, stockbrokers, or attorneys. We are not licensed commodities brokers and do not engage in or facilitate commodities transactions. We are not an introducing broker, and we make no recommendation as to where you should invest or what broker you should trade with. As you apply what you learn, we recommend you seek advice from licensed professionals. Any trade results that we show should not be considered typical of our students. We do not and cannot track the results or performance of our students' private trading accounts. We do not know what a typical or average student earns or loses trading. This is not a get-rich-quick program, guaranteed system, or business opportunity. We sell training and trading tools. We make no promises our training or tools will generate future income for students, and you may not make your investment back, including your investment in this training. Any redistribution or recording of this material is strictly prohibited without advance written permission.
All right, so now let us continue. As you know, we have a number of live trade schedules or live trades conducted. An announcement this week is that we are going to add a Thursday morning session, same time. And starting in June, first full week of June, we will add a Monday evening session. So this Thursday at 6:30, we will have a session. And then again at starting in June 7th, we will add a Monday evening session. So there'll be 3 live sessions with me. For the lights, you've got Intro to Coaching, 9:30 a.m. Tuesday and 10 p.m. On Thursday, and then the light member meeting Wednesday evening. Regular members, they've got a much wider opening of the live trades. They've got access to the MIT in the morning, the AIT at night, Saturday back to basics training, and then the Sunday afternoon trade. So lots of opportunities for free trades to improve your skills. The people who do these various sessions are all good traders, so there's something to learn. Until you get to the point that you're doing at least 10 pips a day, I would attend as many of those as you can. As you know, I like to work off of, or in case you don't know, I like to work off of a trade routine. First step is to see if my charts are live. So let us do that. I know my chart's live by seeing it's green up here and seeing it's green down here in the corner. And then to check my CoinEx. And I can see the numbers are moving over here on the left. So my CoinEx is live. The trade that I primarily do is something called the 10-point trade. That's kind of my bread and butter trade. We show you kind of a simplified version of it if you're in the light. I'm going to go through kind of the full version of it. I also sometimes use another signal called the thick orange line signal. It's a quick scalp that we can take at the top of the hour. We've got, with our signals, there's at least a dozen different signals that you can trade off of. you will become familiar with one or two, and that'll be your kind of your bread and butter trade, depending on whether you like to scalp or trade on a longer term. I tend to be a single sitter. I'm looking for 10 pips. Sometimes I'll take a 20 pip trade. Like to start by reviewing what I did the previous day. The review is important because it helps me improve. It helps me improve because it forces me to sit down and kind of take a look at what I did wrong, or why a trade didn't go the way I thought it would go. Last week we found one trade. It was a. I didn't write down whether it was a. I didn't write down whether it was a 10-point trade or a thick orange line trade. It looks like it was a thick orange line trade because we took it for looks like 5 pips. That one, I find the best way to do this: take a screenshot when you take the trade. That way you can go back and look at it afterwards and figure out why it did or didn't work. Before we start trading every day, we want to be aware of what the news events are for the day. That will help us avoid holding a trade when news hits. The way news interacts with the currency pair, our indicators can't accommodate for. So if we see that there's a news event coming up, we want to stay away from trading on that event. Usually I like to be out of it 2 hours beforehand. Excuse me. The news source I look at, something called Forex Factory. Forex Factory breaks the news down into 3 types of events: a low impact, which is a yellow; a medium impact, which is an orange; and a high impact, which is a red. So it's the red ones I want to stay away from. So today at 10:30 Eastern, the Bank of England governor speaks, and he has the ability to move a market. So right now we're at 6:30, so it's 4 hours away. So we could take a trade if we thought we were going to be out of it in a couple hours. And then everything else is small news we don't need to worry about. So we've got reasonably clear sailing. And now we are going to do our technical analysis. So I am going to start. I use this chart. This is what I call a composite chart. It has 6 different currency pairs on it: Australian dollar, euro dollar, pound dollar, dollar Canadian, dollar Swiss franc, dollar yen. It's all a 1-hour chart. And I use this as the setup for determining whether I have a trade. Once I see the setup, then I will go to the more detailed chart to decide if I want to take the trade and how many pips it's worth. Here I start with the middle chart, which is what we call middle chart is our majors and minors. I'm looking for situations where I'm overbought or oversold. Overbought is above the blue. Oversold is below the red. I am currently overbought on the Australian dollar. Everybody's pointing down. The majors are the red and greens. The minors are the black and grays. Everybody's pointing down, and I have red over the green and black over the gray. So I've got 3 points here. First point is that I'm overbought. Second point that is that all the lines are pointed down. Third point is that I've got a double cross on both lines. If I have 3 points here, I'm going to pop up to my TNTs. TNTs, I've got 4 signals: the 2 orange lines and the 2 blue lines. Orange lines are directional. I want to see how many lines are in agreement with what I'm seeing here. The 2 orange lines are going down. Blue lines are inversely related. So when blue is going up, that means down. So I've got the 2 orange lines going down, the 2 blue lines going up. So I've got all 4 telling me that there's a down move coming. So that's consistent. Then I'm going to go to my third indicator, the pressure, and I want to either see the lines going down or the red on top. Right now I have a week up in the pressure. The reason it's a week up is that the lines are far apart. The signal is stronger the closer the lines are and the steeper the lines are. So I've got these lines are far apart. They're going up. Usually when you get a gap like this, that means there's retracement going on. So if I'm looking at retracement, I would recover what's on this candle here. But it is a slight up versus a sideways. So I do not have something telling me that the down trade is ready yet with the pressure. I've got indication here with the majors and minors. I've got indication here with the TNTs, but I do not have indication here because the pressure is going up and the red is on the bottom. The slope on the green line here, which is something I look at a lot as to what's going on, has diminished. Here it's steeper and here it's less steep, but it's still not quite ready. So I need to have a point from all three sections to want to take this trade. If I don't have it, I'm going to pass. And the reason I'm going to pass is I want to have a high consistency or high accuracy rate in my trading. My accuracy rate's a little over 80. And it keeps track of that on FX Blue. I don't need to make a lot of trades. I just need to make a few good trades. So I'm looking for those few good trades. I do like this. I do like this, but I don't have it down here on the pressure. So let's go to the next one, Euro USD. Pretty much the same setup. Overbought. Everybody's pointing down. And I've got the double cross. So 3 points. The two orange lines going down. Dotted blue coming up, which means down. Thick blue is going down, which means up. So I've got 3 of the 4 of the TNTs here. As long as I have at least 3 out of the 4, this is okay. Thick blue is usually the last guy to turn. So I've got 3 blue here, or 3 points here, 3 points here. I've got up pressure again with green on top. So I don't have a point from the pressure yet. I need these to cross. These lines are converging, so they're getting closer. But they are, like here, they kind of are, but it's going to be a long time before they cross on the Australian USD. But here, maybe in the next hour, this is going to cross. But it's not there yet, so I'm going to pass. Pound dollar. Overbought, everybody's going down. Double cross. Thing I don't like here is, see the steepness of the line on the left side of the vertical line, and on the right side, this is less steep than it is here. So this downward move is a little less strong than it is here, where there's no, if you look on the euro dollar, there is no kink in the line. There is a kink in the line here. That kink in the line scares me. But we do have all 3 points. 2 oranges going down, dotted blue going up. So 3 points here. Again, up pressure with the lines converging. The green line here is more steep than the green line over here. Again, so that's consistent with the kink that I'm seeing up here. So I don't like this. Not ready yet. US Canadian dollar, we're just coming out of the channel. Everybody's going up, so I got nothing there. US Swiss franc, we're in the middle of the channel. It's turned, so I've got nothing there. I don't want to take a trade in the middle of the channel because I want to catch a trade when I get the cross. So if you go back and check the euro US dollar, had I taken the trade like back here, I could have ridden it 30 pips as it goes through the channel. that's the kind of move I want to get. I want to get it when it's at one end of the when it's oversold, and then ride it till it's overbought, and then ride it back. So if I'm in the middle of the channel, I can't get as many pips. So I don't want to bother. US pound oversold. Everybody's going down, so that's not ready yet. So let's go to another set. I've got 3 sets of these composite charts. This one is primarily non-US, because usually whatever's driving this, the euro dollar, US is driving that. You're going to see something similar on all of these. So if you're looking at the Australian dollar, euro dollar, pound dollar, all of these look very, very similar. All of the pressures look very, very similar. Euro pound, I am overbought. The lines are kind of going down. This is a little sideways, and I do have the double cross. I don't like this because the major is going sideways. But we do have 3 points. It technically meets the criteria. And then if I go up to the TNT, I've got mixed signals. I've got thick orange down, thin orange up, dotted blue going up, which means down, thick blue going down. So I may have 2 of the 4 here. So I'm not going to proceed unless I have at least 3 out of the 4. So this sideways is consistent with what I'm seeing here. It's just not quite strong enough yet. Australian dollar, yen. This would have been a nice one to catch. Might have been news related. Nice. See how there's nice steepness on these lines, and all the lines are close together. Like, this is ideal, but it's more than halfway through the channel, so I'm going to pass. Euro Canadian, overbought, hasn't quite turned yet. It's getting ready to turn, but it hasn't. Australian New Zealand dollar, we're in the channel, and it looks like it's starting to turn before it's gotten all the way through the channel. New Zealand dollar, USD. This is very similar to what we were looking at with the other USD. Overbought, everybody's going down. 2 orange lines going down, dotted blue going up. So I got 3 points here, 3 points here, but the pressure's not there. So we're going to pass. Here, we've got no steepness to the majors. It's in the middle of the channel, so we're going to just pass. Australian Canadian dollar, overbought. The line's coming down, although it's not that steep here, but we've got 3 points. Overbought, everybody's coming down, and I got a double cross. Thick orange is coming down, thin orange is going up. The 2 blue lines are going up, which means down. So I've got 3 of the 4 here, but rather than it being the 2 orange lines in the dotted blue, it's the 2 blue lines in the thick orange. I'm a little concerned. I really like to have the thin orange line showing me or being on board. But I do have 3 points here. Again, the pressure's not there. I've got the kink in the green line, so it's converging, but I've got this gap. This gap suggesting retracement, and we've almost retraced this. So again, I'm going to pass. Swiss franc yen, oversold and still going down. Euro yen, we're a little bit more than halfway through the channel, so I am going to pass. Pound Australian dollar, we are oversold and going up. I'm okay that the minors are in the channel. I'm more interested in what the majors are doing. So I've got them pointing up. I've got the double cross. So I've got 3 points here. But again, mixed signal here on the TNT. 1 orange is going up, 1 orange is going down, 1 blue is going down or going up, which means down, and the other. So I only have 2 of the 4. I need to have 3 out of the 4. So let's pass. New Zealand Swiss franc, overbought. Everybody's going down. Red over green, black over gray. I like the majors here. Nice and steep line. The steeper the line, the better. So I like this. This is a nice setup. Two orange lines going down. Two blue lines going up, even though the dotted blue is almost sideways. So you could say 3 out of 4 or 4 out of 4. But the pressure is killing us. The pressure's killed us on all the trades. This is just about to cross over. The lines are converging, but it's not quite there yet. So again, I'm going to wait. So maybe next hour, NZD CHF might be a good trade. Canadian Swiss franc. We're just we're going through the channel just about to the other side. So on the 10-point trade, we've just looked through 18 pairs, and I didn't find one. And that sometimes happens. So what we're going to do is we're going to switch over to a different signal. The other signal, this is good for 5 pips. So we'll go back to the start, called the thick orange line trade. Thick orange line trade looks at what this number is. This is the scale on the thick orange line. Now, for those of you trading with the green chart 2, I'm just learning how to do that. I don't know how to find that number on the new green chart 2. Hopefully by next week I will. But they're switching over. I'm using the web or the program-based version of the program. And they now have a web-based version of the program. Charts are the same, but the way the numbers are, they're set up a little bit different. So the other day I was looking at it and I didn't quite see where this number was. But this number is the scale of the thick orange line. So what I mean by scale is that when this line is, the thick orange line is as high as it can go, it is at 0. When it is at as low as it can go, it is at minus 100. When it is at 0, what that's telling me, how they've indexed it, it says we don't believe there's any more up in the movement. So when there's no more up in the movement, that's a good time to sell. Likewise, when it's at minus 100, it's telling us that it doesn't think that there is any more down in the movement. So that's a good time to buy. However, again, it goes back to I want a high accuracy rate. And to get that high accuracy rate, I want something that supports what this signal is telling me. I want something else telling me, yeah, this is a good trade. And what that something else is if this is at 0, I look to see where these lines are. If this is at, if this is at 0, I want to see all these lines well above the blue. If this is at minus 100, I want to see all the lines well below the red. If I have condition 1 and condition 2, that's a good trade. It's worth 5 pips all day long. I usually like to take it when that's whatever one of the specific currencies are in the morning. So I will take this up until about 11 o'clock Eastern time. And it's good for 5 pips all day long. So what we're going to do is we're going to catch the bounce at the top of the hour. We only want to take it at the top of the hour. And if we look up here, TR stands for time remaining. So there's 6 minutes left in the hour. So we're just approaching the top of the hour. So minus 52 is not close to 0 or minus 100. It doesn't have to be exactly 0 or minus 100. It can be within 10 points of either end. Minus 33 isn't close to 0 or minus 100. 39 is not close. 36 is not close. 93 is close. That's within 10 of minus 100. So I've got part 1 of the signal. When I look for part 2, the lines are in the channel. I want all the lines down here. So I don't have it. USD JPY. Minus 94, that's within 10. And I do have all the lines down here well below the red. So I like this. So I've got part 1 of the trade. and part 2 of the trade. So we're going to go ahead and take a 5 pip buy because the market, it's oversold, and I've got the 2 signals. So let's go ahead and do that. USD JPY. This is a demo account that we're looking at. My lot size is going to be based on how much is in my account. This account has 8,900 in it. So I'm going to just move the decimal spot over 4 spots and go to 0.89. 0.89. So new order, yen 0.89. It will be a market buy. It has recorded it down below here. So I'm going to highlight anywhere along the line, go to modify or delete order, and then I'm going to add in my take profit and stop loss. This trade is always good for 5 pips. So 50 points equals 5 pips. And this trade is accurate about 90% of the time. So on a 90% accuracy, we are going to use a 4-to-1 stop loss. So if I win 9 of these 5 pip trades, I'm going to be net ahead 45. If I lose 1 for 20, I will be net ahead 25 pips. So 4-to-1. Now, the only other thing I like to do is just to make sure I get the full 5 pips. So if I'm at 108.73 and it is a buy, I am going to add 5 to that 73. So I'm going to go to 78, and it is exactly 5. So I'm good. I click it. It puts my stop loss and take profit in. Let's go see if we have another thick orange line. Minus 30 isn't close enough. Minus 66 isn't close enough. 21, no. Minus 95, yes. So I've got part 1 that's within 10 of the minus 100. The lines are touching, but I don't want the lines just touching. I want them well below. So to me, this isn't quite strong enough. So I'm going to pass. Minus 27, no. 0, yes. But my lines aren't well above the blue, aren't well overbought. So it's not quite right yet. So let's go to the third set. Minus 51 or 50, no. Minus 47, no. Minus 55, no. Minus 68 is close. Minus 82, no. Minus 100, yes. But again, the lines aren't there yet. I want them down here. So this morning, we've looked through 18 pairs for 2 different signals, and we didn't see anything. Now going back to the, we had just got the 1 trade here. Some traders on this thick orange line trade want to wait until the hour actually changes. It's going to change in an hour and 42 minutes, and they want to see this number jump by at least 10. So it would go from minus 84 or minus 94 to minus 84. I am good when I see all these lines well below the red. I've had very good success with it. But since we've got 1 minute left, let's see what happens. Let's see what we've got for questions while we're waiting. I've got a question. Can we trade crypto? Yes, we can. What I may do is I will add a crypto chart and a gold chart to our list of charts here. I haven't traded crypto, but you can, and there is extra coaching involved in that. So why don't you reach out to me directly? Do I ever trade the 10-point on smaller charts? I don't, but you can. You can trade these on any chart. Trade them on a day chart, to a smaller chart. Smaller chart, the move will happen faster. Larger chart, you know, if you have the signal in a larger chart, it's going to be worth, you know, instead of being worth 5 to 30 pips on a 1 hour chart, it's going to be worth, you know, between 30 and 150 pips. But you're going to have to wait a day for it. All right, so it just changed. Let's take a look. Oh, so we didn't get the bump here. We didn't get the bump here that we wanted. So what that's going to tell me is that we're going to have to wait. Instead of this trade closing in an hour, it's going to take a couple, 2-3 hours for it to close. You know, we're still at minus 92. The lines are still well over oversold, but it's going to take another hour for it to materialize. So this trade that we just took, we're going to have to wait a little bit for it to make its break. Okay. Well, guys, thank you for being here. And we will see you Thursday. All right. Bye-bye.